let's go to New York now. Neel Kashkari joins us from PIMCO. As we look at the overlay here, we move him up in the show as we look at James Dimon and regulation. Neel, welcome to Surveillance Midday.
Thanks for having me, Tom. It's great to be here.
What did you think of James Dimon's speech, or comment, I should say, to Chairman Bernanke? Is this the beginning of a greater tension between the financial community and our central bank?
No, I think that this is to be expected, and it's understandable. Regulation is a pendulum. The pendulum is now swinging towards more regulation. We're not going to get it all right the first time. This is going to take many years for the markets to fully understand what all these regulations mean. There's no question we're going to overdo it in some areas, underdo it in other areas, and years from now we're going to go back and we're going to make changes until we get it right. So this is part of the democratic process, and this kind of dialogue is not at all surprising and makes a lot of sense, frankly.
When you look at this, Neel, and the ebb and flow, I look at your government service, particularly with TARP. What is different about the debate now from the debate a few years ago when you and Secretary Paulson began this odyssey?
Well, a few years ago, we were just trying to keep the financial system together to prevent it from collapsing and potentially plunging our country into a repeat of the Great Depression. The good news is we were successful in stopping that terrible outcome from happening. The bad news, of course, is the economy still suffered severe damage. Many, many millions of Americans were affected by it. Many people are still affected by it. And now the hard process is not just keeping the system together, but reforming our economy, getting it to grow. That's going to take time, and there's no quick, easy solution.
Let's bring up a long-term view chart, folks. Thanks for the emails on this chart. The Dow Jones Industrial Average back a gazillion years. And you can see here the financial markets. There was a depression. Look at it there on the left side. And then we go up, and there was a malaise of the 70s. Neel, are you concerned that if we have too much regulation, we could see what we see in the middle of that chart?
You know, it's certainly possible, but I think that many market participants and many policymakers are also focused on it. Remember, just before the financial crisis, the big dominant talk in Washington and on Wall Street was capital markets competitiveness, the fear that we had too much regulation even before the crisis. So I think that we have a healthy divergence of opinions in America, and that we're not going to let the pendulum swing too far. In any certain market or any certain sector, we may overdo it, but then people will raise alarm bells. Congress will get the attention. They'll focus on it. And I'm confident that over the period of several years, we'll strike the right balance, even if we're not there day one.
Neel, very importantly, have you seen the policy of PIMCO change, their investment policy changed with these worries about regulation?
Well, it's something that we pay very close attention to, and obviously it affects different sectors and different asset classes differently. So our professionals who focus on financial institutions are deep in the weeds to understand what these regulations mean, both for the debt and for the equity of banks, as an example. But, you know, we take a long-term view as we're investing. We look at long-term fundamentals. And to us, you've obviously heard Bill and Mohammed talk a lot about the new normal. We think the new normal is here to stay for the foreseeable future, and that's going to have big implications on where we're investing our clients' money.
Neel, what kind of policy would you like to see out of Washington? What is the change we need to see right now?
We need to reform our tax policy to encourage savings and investment. Tom, remember, for 30 years, our economy accumulated debt. That debt fueled consumption. That drove GDP growth. That drove asset price appreciation. We need to reform our economy much more towards savings and investment. And fundamental pro-growth tax policy can help move us in that direction and can help make our debt overhang less painful, so that the fiscal adjustment that we need to make is not as extreme as it would be in a slow growth environment.
And you could see Neel's writing at the Pacific Investment Management Company website, PIMCO website. Let's bring up a note from April of this year, just as true now as it was then. You could see it here on Secretary Geithner. There it is. There's our beautiful set here. Andrea Cather, we're just on that in London. Defining the systemic risks from growing deficits could bolster public support for making hard fiscal choices. Neel, they're trying to do that here in the United Kingdom. What have you learned from austerity in the United Kingdom?
Well, there's no question that austerity has short-term consequences, but we can't just continue to kick the can down the road here at home. We can't continue to try to use short-term stimulative measures to delay the necessary economic adjustment. We've tried this now for a couple of years. Think about the housing tax credit that Congress passed a couple of years ago. You got $8,000 if you bought a home. people ran out and bought homes, and then as soon as the program expired, housing markets started falling again. At the end of the day, our economy needs to adjust. We need to get our fiscal house in order, and that's not free. That's not pain-free. There's going to be real sacrifices people have to make if we restructure our economy, but just trying to stimulate the economy to delay that adjustment, it's not going to work. It hasn't worked so far, and it's not going to work going forward.
Neel, thank you so much. Neel Kashkari from PIMCO. He talks about housing. To me, that is the distinction here.